Hey guys, good afternoon. Good afternoon. So we had a bit of a sell-off coming into the session this morning, um, and then it flipped over and retraced. The tracement's still running back up. So we're doing a deep retracement. And let's take a look at the VIX to figure out what's going on. It's a huge retracement all the way back into, the daily ones. Or I guess that was the tail. Sorry, that was a big gap down. The white lines, those aren't daily ones. Apologies. Daily ones are up here. There's your daily 3, and this is your first tail. Um, okay, so here is the VIX. We got up to the 37-day one, um, and flattened out. The gamma flipped long. The net GEX, the cumulative gamma for the strikes going into OPEX, um, cumulatively flip around this 1960 going long at this point. So the dealer definitely didn't want the market to continue running short at that point. So we just rolled over. Um, here it is on the monthly 23-day, 30, 37-day distribution. And the reason we do this distribution for VIX is because the SPX um, options are used in the VIX calculations by the CME, no fewer than 23 days and no greater than 37 days. So they're using this monthly window for SPX options to do their calcs for the VIX. And so we can lay our probability distribution on the VIX index itself and get a very good idea of where these probability levels are going to be. And as you can see, we ran out of room right here at the 37-day 3. Excuse me, 37-day 1. There's a 3 right behind it. And, or no, that's not a 3. That's a SMA. Sorry. It was orange, so I just immediately thought it was a 3. But it's all making sense as far as why the market stops where it does. There are some additional ones. We can get a little bit higher, but we're going to be going into, at the moment, um, positive GEX. So that means that the market's going to be going much faster and potentially much further. So it had a really good set off today. It was pent up demand. And that's a nice retracement also, all the way back in to this monthly 1 level. I think this is the 23-day 3, or 23-day 1, sorry. 1750. Oh, that's it, R-ball. 37-day R-ball. Okay. Very nice pullback. So I said this morning on our pre-market video for the subscribers to expect a lot of up and downs today. And we sure got it. So it was a great day for volatility trading. I want to point out the crude market. had a nice rally off this huge bear bar down to the daily one where dealers came in to support the market, had a nice rally up. But the reason this first initial thrust stalled out and wasn't able to hit the daily 3 at 16.15 is because it ran right into the weekly 3s. So there's always a higher time frame um, reason why a lower time frame can't reach target. Is because a higher time frame came in and the weekly levels are just under these monthly levels. So 66.42, 67.24, we're running out of upside headroom quickly for crude on the very first day of the month. So unless they're going to be moving their risk out and moving this back up to $70 a barrel, this is out of headroom for the moment. So I would pay attention to 65.73, 65.79 as the buffer and see if we can get this back down. That was a huge ATR bar, wasn't it? Pushing it off that weekly level. So that's what's going on with crude. And trying to keep you off their monthly ones as well. So you might be finding a bit of a reversal area potentially, but I mean, crude has got max pain going long into the next few weeks. So we'll see what happens. We'll see if the dealer moves risk out or if we hold those ones. I mean, it's kind of early to be challenging that, to be honest, without a little bit of resistance. Usually that first touch will find that resistance. Gold, we had a great move up to initially our daily 3 close, and then it went up to the daily 3 open, 3600.7, right on target. And gold, likewise, we're at some overbought areas right now. We have a weekly 3 at a weekly 2, so that looks like it's a 7-day 3 at a weekly 2. It's 7-day versus the number of trade days in the week, which would be 4. And that confluence right here. So we might be at a resistance area. There are weekly 3s above it, HVAL, in case it does break it. But this does look like a pretty good resistance area for the gold. And likewise, you're on a monthly HVAL 3 and a 1 right here. So there is a strong resistance area also. So if this breaks and goes higher at the beginning of the month, we're going to have a good month for gold, getting it up higher. 36.19 on the quarterly for the quarterly resistance. So another 20 points really before the quarterly level is challenged. And then you would run right into these weekly 3s. So we're running into resistance on the first day of the month. Definitely some pent up demand for some volatility. Bitcoin just stayed inside of its daily ones. Let's take a look at the oh, E- ES is still running. So this is coming back down, and Q is still running. So retracements are much deeper. So maybe some news came out, or I guess we might have some earnings. No, maybe it was just something else got announced, or they just decided put the pedal to the metal to the upside. Market on close orders, rocking it. Okay, so we reversed at the weekly 2, back inside the weekly 1, and the monthly beautiful bounce up of 23.039.25, which is a level I pointed out this morning. Very nice touch and go, right on the tick. And that was monthly 1 R ball. And here's a quarterly level at 23.045. So we're definitely getting a bit of a bounce at the moment. But be careful with these bear bounces. They absolutely can be lengthy and then turn right around and drop again. So we'll have to be very careful and, pay attention to the options market and see where that IV term structure is looking. And that's another thing that we can do with Jats PT is look at the Jats PT term structure to do a 10-day. If you get the indicator by putting a 10-day PT2 on the chart, can do a daily one, and then let's do a 10-day one. Instead of a 14 period, I'll make it a 10 period. Well, let's just go ahead and walk it out. So we can do a 2, a 3. Get my template out. This is the single line, just to show you what it looks like. And you can see the graduation, whether the vol is moving up or down or flat. And right now we're definitely moving up. The 1 day is above the 2 and the 3 day. So let me go ahead and put the 4 day on here. Or period. And put this on panel 2 as well. This will be Friday. So you can see Friday, the 4 day range is at 61, and we're already up to 105. So you can see that we're already way above the 4 day range. This peak, and all of the ranges are expanding. So we're going to have to come. Let's just drop it down to 120. So you can see we've got maybe 20 more points of range expansion before we run into resistance for how far our range will get. You see what I'm saying? Before it snaps back down. Do y'all understand that? We're You can run this up, like they do with the term structure. You can put 10 days. I've only got 4 on here, but we have a 4 day week. We could take this into OPEX. How many days are going into OPEX to get, a broader volatility base, but for now we can see that the ranges are expanding on all periods. And we extend from 61, 65, 67, 75 to 105. We're way extended. Almost 2 to 1. So we're definitely they were definitely overbought on this session today, compared to history. So that pullback definitely was coming. And so if you take the difference between the 105 to the 67.75, subtracted, that would be 37.25. We come back over here and see what that pullback was. 70 points. Hang on a second. Right here, 70 points. Look. That's right where we are. Oh my gosh. So if we go from the high today to this point, there's your 30 points. Well, that's not the 37.25. Let's see, we've already gone through that. 37.25 would have been right here, and we broke through it. So it pulled back to its level and then broke through it. So I wonder if the market's now flipping back the other direction at this 64.38.25 level. This looks like it's a key support level now. I have to mark that on the chart. All right, let's mark that. See if we keep that support or resistance. Just from an eyeball view of taking this back down for the retracement. But that was a nice move. This 5 hour, um, 2 times the 5 hour range, you can see when the extension, let me show you what I'm talking about. This right here. That's what was holding the market up, this little inflection off of it. I was initially complaining because the actual level dropped all the way down to here, and now it's all the way down to here, but the market flipped around. And that's what happens a lot of the time is these levels are seen by the algos as a reversal location. So they had dip buyers come in right there. All right. Okay, so more fun with the ranges, but that's what you can do with Jats is you can measure 1 day range, 2 day range, 3 day range, 4 day range, and then see where your levels are and see when they pull back. Do they pull back to those statistical levels or do they pull back to an average? And you can try to, trade those inflection levels, just like I'm showing you. So when you're running your implied volatility term structure, you can come in and look at the realized volatility point ranges with that and see if you can put the puzzle together. All right, so that's it for tonight. I hope y'all have a good night, and we'll chat at you in the morning. Let me know if y'all have any questions. Thank you so much.